This is a special podcast presentation from 700WLW.com. This is Casey Boland On Demand.
Casey Boland talks money this time of the day, and the people at Morningstar provide research for a lot of securities, and apparently it would show the average investor does not do as well as the average fund does. How could that be?
Well, it's a trend we've been seeing for a long time. So they measure the performance of how the actual fund is performed and how the actual investor is done. And the reason you see this underperformance is because investors will jump in. They're going to be buying and selling at the wrong times, oftentimes chasing hot performance, and when things don't go well, selling. So they're not capturing the returns that the fund has had to offer.
In other words, they're being impatient.
Yeah, they are being impatient, and according to the recent study, the areas that fund investors have lagged the most have primarily been with international funds. So Europe, Japan, diversified Pacific Asia area, India, and these regions, they've been more volatile in recent years where there's been periods of time where there's been strong outperformance versus the U.S., but we've seen a lot of significant underperformance versus the U.S., so I think this is another case where investors have not been able to stick with these funds, and they've been lagging U.S. stocks for the most part in recent years, so people have kind of jumped in and out. They know they should hold a diversified portfolio, but they've not been able to completely stick with that plan.
So we'd have what's known as a target date fund. Would that be where I'm committed to stay in for X amount of time?
Well, a target date fund, let's say there's a 2030 or 2040 fund, it's tied to maybe your age when you're going to be age 60 or 65, but this is an area, surprisingly, where investors and performance of the actual fund has been matching up almost perfectly. And the reason why is target date funds, they're diversified. They hold a lot of different funds within the portfolio. You don't necessarily see that. So investors have stuck with the plan because they know it's diversified, but surprisingly, they've not been jumping to some other hot funds. So these funds, I think, have been working very, very well, and these are ones that you've been finding in the typical 401k plan.
So you see that as a promising trend. Stick with it.
Yeah, definitely. Now, we'll see how this pans out during a bear market. You know, target date funds have only been around more in recent years in this bull market period, so the true test is still to come. But, hey, right now, target date funds, they look like they've been working very, very well.
All right. Casey Boland of Hanghold Capital Management, thank you so much. We're looking at about 6 away from 9 o'clock. See what Scott Sloan has coming up just ahead, 700 WLW.